Hello my fellow investors and welcome back to another earnings report and stock analysis video. Today guys, let's actually take a look at the company Devon Energy Corporation because they just had earnings as of the 14th on Valentine's Day after market. And I would actually like to take a look at this because I think a lot of people have actually talked about this company in the comment section. So I would like to take a look at this company, analyze their fundamentals, and of course see if at the current share price, this is looking like a very good buy. So with that said, let's get started with this analysis. So let's start off with, of course, Seeking Alpha's earnings review. We got EPS normalized estimate. Unfortunately, they have not updated this yet. However, we do have their earnings as they have been released. But nonetheless, EPS normalized estimate $1.75, EPS gap estimate $1.76, revenue estimate $4.29 billion. As you can see, a lot of people thought that this was going to miss, or at least this was revised downward a significant amount afterwards. Now, what actually happened was that Devon Energy non-GAAP EPS of $1.66 misses by 9 cents. Revenue, however, of $4.3 billion beats by $10 million. So they beat on revenue, they however missed on non-GAAP EPS. Now let's actually come over here into the actual earnings report. Now this is just their very quick summary. We'll take a look at the actual news release in just one second, but nonetheless, let's take a look at what we got over here. Devon Energy Corporation today reported financials and operational results for the fourth quarter and full year 2022. Let me actually make this a little bit bigger for you guys to see. The company also declared its quarterly dividend. Devon's earnings release, supplemental financial tables, guidance, and relative earnings presentation. Okay, great. The company's fourth quarter conference call will be held at 10 a.m. Central, 11 a.m. Eastern on Wednesday, so tomorrow on the 15th, and will serve primarily as a forum for analysts and investors to questions and answers. So, guys, they declared the dividend, right? They declared their quarterly dividend, and they're apparently having their earnings call tomorrow on the 15th at 11 a.m. Eastern. So let's actually take a look at these earnings reports, and we have these right here. Now, okay, this is going to be very interesting because, well, at least on their 5-year fundamental graphs, it does not look good. But let's actually see what they got to offer. So now let's actually come over here and see that Devon Energy reports the fourth quarter and full year 2022 results, declared quarterly dividend, and raises fixed dividend by 11% in 2023. So you guys just got an 11% raise in dividend just by not doing anything. So congratulations if you own this company. Just because a company pays out a dividend though does not mean that it is sustainable. So watch out, because if that 11% is not sustainable, it will get cut in the future. We'll take a look at that in just one second. Nonetheless, we got over here, operating cash flow increased 74% in 2022, and free cash flow reached highest level in Devon history. So you know what? Congratulations. I really do love it when companies do this. The first thing that they put is, here's the free cash flow. We know what you guys like. We know what investors like, especially when it comes to fundamentals. Free cash flow, number one, boom, there it is. Highest level in Devon history. So congratulations. Really nice. Fixed plus variable dividend payout more than doubled in 2022 to $5.17 per share. Board approved 11% increases to a fixed quarterly dividend in 2023. Really nice. So you're going to get, wow, that's a massive amount though. That's a massive amount. Share repurchase program on track to decrease share count by 5%. Okay, so we're going to take that now into account. And when we make assumptions, we're going to put that as part of the assumptions. Keep that in mind. Oil production reached all-time high of 316,000 barrels per day in the fourth quarter. Proved reserves increased 12% to 1.8 billion BO at year-end 2022. Guys, all of this is looking really solid. Now let's take a look at what the CEO had to say. He actually had a lot to say. It's not too much actually. But we got over here, quote, 2022 was another year of outstanding accomplishments for Devon that resulted in record-setting operating results and the best financial performance in our company's prestigious 52-year history, said Rick Muncrief, President and CEO. Quote, with our powerful suite of assets and financial-driven strategy, our oil production reached a new all-time high. Our streamlined cost structure captured the full benefit of rising commodity prices. Boy, did it rise. And our disciplined reinvestment rates allowed us to generate a record-setting amount of free cash flow during the year. Absolutely love it. I absolutely, regardless of what we see when it comes to the fundamentals, I love when the CEO is just like, free cash flow, number one. That is what we're going to put face front on our earnings report, free cash flow, because we know that's exactly what you like. This free cash flow generated allowed us to reward shareholders by more than doubling our dividend payout, and we expanded our share repurchase program twice during the year, further compound share growth. Absolutely wonderful. This is literally like, this guy is exactly what I like to see. Like, what he's saying is exactly what I like to hear. We also deployed a portion of our excess cash towards strengthening our asset portfolio by closing on 2 highly accretive bolt-on acquisitions. As I look to 2023, there will be no change to our disciplined approach to the business, Moncrief commented. We have designed a capital program to efficiently sustain production, deliver high returns on capital employed, and generate significant free cash flow that can once again be harvested for shareholders. Absolutely love it, guys. Absolutely love it. Whatever we see when it comes to those fundamentals, at least from a qualitative standpoint, this CEO is absolutely awesome. I don't know much about him just from this statement, but it's all looking really, really good. So now let's actually take a look at their consolidated statements of earnings. Now for this one, I actually had to come over here and click on the supplemental table. So what I'm going to leave for you guys is this link, just so that way you guys can click around. But nonetheless, we got here their consolidated statements. Total revenues, guys, Q3 of 2022. Well, actually, let's just do the year, right? Let's just do the year. So total revenues for Q4 of 2022, it was $4.3 billion. Q4 2021, $4.27 billion. When it comes to the total expenses, we could see that in Q4 2022, it was $2.75 billion, and in quarter 4 of 2021, it was 2.6. So this actually increased by around like $100 million or so. And when it comes into the net earnings, we could see that in Q4 of 2022, it was $1.2 billion, and in Q4 of 2021, it was actually a lot higher. It was a $1.5 billion. So their net earnings on the year actually came down. And even from the quarter over quarter, you can see Q3 2022, it was $1.9 billion, and it did come down to $1.2 billion. And on top of that, the net earnings attributable to Devon in Q4 of 2022, it was $1.2 billion, and in Q4 2022 it was $1.2 billion, and in Q4 2021 it was $1.51 billion. That was another drop right then and there as well. When it comes into the basic net earnings per share, we see something similar, whereas right now in Q4 of 2022 it was about like $1.84 per basic net earnings per share and $1.83 for diluted net earnings per share, and in the same time frame in 2021 Q4, it was $2.24 and $2.23. So that also went down as well. And you know what, guys, let's actually come back here into their earnings news release, because, well, their financial results are also right here, and this is actually a lot easier to read. So let's read this a little bit. We got Devon reported net earnings of $1.2 billion. I'm more interested in the free cash flow part. So let's actually come over here. Operating free cash flow totaled $1.9 billion in the fourth quarter, an 18% increase versus the year ago period. This level of cash flow funded all capital requirements and resulted in $1.1 billion in free cash flow for the quarter. Absolutely insane, guys. And we're seeing this right here in the net cash from operating activities, $1.9 billion Q4 of 2022, and compared to 2021, it was $1.62 billion. So overall, guys, their free cash flow is doing absolutely amazing. Now, they also go on to say, for the full year of 2022, operating cash flow totaled $8.5 billion, a 74% increase versus 2021. Devon's free cash flow reached $6 billion in the year, representing the highest amount in the company's 52-year history. So congratulations to them as an awesome, well, that's an awesome, just like milestone, honestly. Like, highest free cash flow ever in 52 years. Congrats. I actually really do like that. I really do. So now let's come into the calculator. We got the ticker symbol for DVN, market cap of $41.8 billion and a PE of 6.71, with a current share price of $63.94, almost $64. So based off of this PE, it's telling me that this is looking like a very good buy today. However, let's take a look at other metrics as well, just to see what we can actually find out from the free cash flow in the past 5 years, their revenues, etc., and of course, their shares outstanding. But for now, we can see that on the 1 year, Devon is up 24.83%. Not surprising, since this is an energy company. Year to date, they're up 10%. Absolutely insane. 52-week range, guys, it is between $47.89 to $78.82. Take a look at this though. Post-market, after they had earnings, they fell 5.43%, down to now $60.47 from the intraday price of $63.94. Now, coming over here, guys, we see that they do pay out the dividend of 72 cents, which is a yield of 1.13%, a payout ratio of 57.96, 5-year CAGR of 61. What am I seeing right here? 61.42% 5-year CAGR. That is insane. Dividend growth of 5 consecutive years. Let's actually take a look at that 5-year CAGR, honestly, because I'm very, very interested in that. Wow, look at that, guys. Look at that. Just in June of 2022, they rose it to $1. Actually, their highest point was September 8th, 2022, $1.37. So that's insane, absolutely insane. But nonetheless, though, is that dividend sustainable? We're gonna find out in just 1 second. This payout ratio does say yes, but taking a look at the payout ratio in regards to the free cash flow is way more important. Ex-dividend date passed as of December 9th. Payout date was on the 30th of December, and they pay their dividends quarterly. Looking further into this, we can see that based off the current shares outstanding, they pay out $513.58 million, and out of their 5-year average free cash flow after this is paid out, they're left with $919.22 million, and in their last year's free cash flow, it was $2.9 billion. Let's see what these payout ratios in regards to the free cash flows are, guys. Ready? And we got, actually not too bad. I actually did not see that. That's really, really good. 15.03% for the last year's free cash flow and 35.84%. In both scenarios, we see that this dividend of 72 cents is sustainable and they could even grow it. I do not know if this 72 cents is exactly that increase of 11%, but nonetheless, if it's not, then, you know, you're still very, very good when it comes into this free cash flow. Now let's take a look at some fundamentals, starting of course with the net income 5 years ago of $3.1 billion to 1 year ago of $6.32 billion, increase of 106%. We have here 2 anomalies, 3 and 4 years ago where they went negative. 3 years ago, COVID related, obviously all oil companies went negative. 4 years ago though, that's a little bit concerning. Not really know about that one. Do your own due diligence on that one. But for this reason, guys, I'm giving this a 45%. Looking at the free cash flow. Now, we see something very, very similar, right? They didn't go negative, but they were still very, very low 4 and 3 years ago. 3 years ago, it is understandable. Nonetheless, though, 5 years ago of $533 million to 1 year ago of $3.42 billion, increase of 541% with an average of $1.4 billion. Guys, I'm giving this a 40%. Mainly because take a look at this massive jump from 3 years ago to 2 years ago. Now, I understand why this jump occurred, right? I fully understand that, but that doesn't mean that it's a good thing because it could just be an outlier. And on top of that, let's just take out these 2 anomalies. 533 to 2.89, let's just say $3 billion. That's insane, guys. That's an insane jump. So that's why I'm giving this a 40%, mainly because of the jump. But you can see that they were able to replicate that into 1 year ago as well. So that's why I'm giving it a 40%. Looking now at the revenue, we see something again very, very similar. We got 5 years ago of $8.44 billion to 1 year ago of $18.79 billion. Let's say $18.8 billion. Increase of 122.6%. And you can see a decrease from 5 to 4 to 3. Understandable, at least the 3 one. Again, the 4 one, I'm not really sure. And then a massive spike from 3 to 2, and then another massive spike of $5 billion from 2 to 1 year ago. So I'm giving this a 55%. Looking at the total assets minus total liabilities, we can see that, well, within the past 5 years, they have been positive. And again, we see the same kind of trend. 4 years ago, they go down from the prior 5. And then 3 years ago, they go down because of COVID from the prior 4. However, I'm actually giving this a lot higher because the change from 5 to 2 years ago actually isn't that much. Average total assets, it is $18.4 billion. Average liabilities is $10.3 billion. Doing this difference, we get a positive $8.1 billion. So again, I'm giving this a 75%. Looking now at the cash flow minus the liabilities. Well, not surprising that, actually, it's actually very surprising because, well, it's actually the opposite of what we've been seeing, right? Normally, we see that the 4 years ago and 3 years ago go down, especially when it comes to those profit metrics. But here, well, they actually go up closer and closer to 0. What is kind of concerning, though, is that 2 years ago and 1 year ago, their liabilities went up. In fact, this is cash flow minus the liabilities. If we take a look at the cash flow as of 1 year ago, we can see that it is the highest, right? However, this right here is almost at the lowest point at negative $9.134 billion. So that's kind of concerning, even though they did have the biggest amount of cash flow this year. Average cash flow minus the average total liabilities, we get negative $8.42 billion. I'm giving this a 50%. Looking at the shares outstanding, this one, however, it's really, really bad. But there are some pretty good positives when it comes to this, especially in that earnings report when they said that they're going to start repurchasing shares back at around like 5% or so, right? So that's something to look forward to. Nonetheless, though, this is still an increase in the 5-year of 449 million shares to today of 713.3 million shares. That is an increase of almost 60% on the 5-year. And from the previous year to the current year is another increase of 9.07%. Most of these shares issuing, guys, was placed from 3 to 2 years ago, going from 382 million to 663 million. So it is what it is. They doubled essentially, but they are saying that they're willing to buy back. But for now, just looking at this graph, I'm going to give this a 25%. This is not looking good at all. And lastly, when it comes to the cash and equivalents, they got $1.2 billion with an average of $2 billion. Now, looking at the overall grades, guys, we gave them an income of 45%, free cash flow 40%, revenue 55%, assets minus liabilities 75%, cash flow minus liabilities 50%, and the shares outstanding of 25% for an overall grade of 46. Now, you guys can take this with a grain of salt because I just showed you guys the earnings report. You can make the case for shares outstanding actually being a lot higher, right? You can also make the case for free cash flow to be a lot higher as well. The reason why I'm saying this is because based off of those graphs, it doesn't look that way, right? It does not look that way. But if you guys are looking to buy into this company, they do have a lot of positives on them. I'm not going to lie to that. This number might be a lot higher for you guys, so please make sure you do your own due diligence and of course have these calculators where I also have the weighted grade and see where your grades actually land on. Me personally, I need to be able to see it. Like them just saying we're going to do this, we're going to do that doesn't really tell me much. I need to be able to see them actually do it. That's why I'm being very, very safe and saying 46%. So with that said, guys, now let's come over here and see if at the current share price of almost $64, but after market it went down to like $60. Is this a good price? Now, we got low, medium, high assumptions. I'm going to say a revenue of 5, 6, and 7%. I'm getting this, guys, from the revenue growth forward. However, you can see that it's estimated at 55.61%. I'm sorry, but just no, right? Absolutely no. I think that's mainly due to the fact that oil has just been skyrocketing, so people are just like, it's gonna keep going up. It's not gonna keep going up. Everything will eventually come down back to the normal, back to the median. So I went with 5, 6, and 7% revenue growth. And the projected share buyback, I understand that within the past, previous year to the current year, they have issued around 10%. However, they did announce in their earnings report that they are planning to buy back at around 5%, which you guys could see right here. Share repurchase program on track to decrease share count by 5%. So assuming that they're able to do this, let's say 2, 5, and 8%. With a required rate of return of 10%, guys, this puts me between the range of $62.21 to $70.81. Now, adjusting for debt. Adjusting for debt, it does come down to $55.91 to $64.12. With a margin of safety of 5, 10, 50%. This puts me between $47.52 to $61. Guys, at the current share price, again, this is now $60, not $63. This is looking like a pretty good buy in most scenarios, right? You got here, 53, 56, 60. Right here, you are already good with this high assumption 5% margin of safety. And on top of that, there really isn't much difference between $60 and 56. So you're very, very close as it stands. And if you guys like this company, well, and by discounted free cash flow, it is looking like it is a pretty good buy as it currently stands. Again, this is just based off of my assumptions. Please do your own due diligence and see where your numbers actually lie. These ones as well as the weighted grades. I got this calculator, the book valuation calculator, and the REIT calculator as well, and even a dividend tracking sheet for everybody to have. It's all for free. My goal is to help everybody with their finances, with their ability to make purchases on the stock market with some kind of, I guess, basis, right? And not just buy into a company because graph go up, right? I really do not like that. If you're going to buy something, buy it for a reason, because when it goes down, at least you have your reason. And if the reason stays the same, then you could say, I'm going to buy more. So that's essentially what the purpose of this channel is, guys. That's why I'm giving this all for free. All I'm asking for in return is just like, subscribe, comment. It really does help her with the algorithm on YouTube. Y'all are insane. I just finished a live stream and I'm recording this now because I want to provide you guys content. So if you guys haven't watched the live stream, it is on YouTube as well as Rumble. It's on the VOD. So if you guys would like to see that, but it's me and Mike. He's the one that does technical analysis. We're talking about CPI, and I also talked about the future of the channel. So if you guys would like to watch, it's about an hour and a half. If you guys would like to watch it, it is there for you guys to see. Again, all that we're asking, guys, is just like, subscribe, comment. It really does help with the algorithm on YouTube. Thank you so much for your support. We really do appreciate it. Now let's actually take a look at this dividend, because 72 cents is not a lot, but it does seem like it's a really good price to buy it at. So putting in $5,725, this nets us $64.47 in annual dividends. Not too bad. Now, I personally would prefer a lot more, right? But the prospect is that Discounted Free Cash is telling me that it is a good buy right now. So you may not be getting a dividend, but you have a lot of positives in the future for them to continue to raise that dividend. And it may not be a lot now, but down the line, you might get a lot more. I mean, you just got an 11% increase in dividends if you had this company already before. So there you go. The dividend currently right now is not really high. However, it is looking like a really good price, as well as you have a lot of prospects in the future for them to increase that dividend. All in all, when it comes to Devon, I think I've analyzed this one prior time, and I don't think I did a really good job at it. I think I did a much better job at it this time, and I think my opinion of them has changed. I do not remember what I said before, but if my opinion has changed, great. And if it's for the better, then great, because I think I didn't like them that much the first time. I actually kind of like them right now. I still prefer Chevron, don't get me wrong, but this one is not too bad. It's just that their fundamentals in the past just are very, very for me. If they're able to do what they're saying in that earnings report, this is looking like a very good buy. That pretty much is it for this video. Like if you like, comment, subscribe. It really does help her with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out. I'll see you all in the next earnings report analysis, stock analysis video.